Hey, before we start, guys, just want to quickly say that, of course, my thoughts and prayers go out to anyone that is affected by the whole CV situation. It kind of sucks to talk about stocks and money at a time when there's a lot of people out there hurting, but this is a stock market channel, and when something affects the stock market, we do have to kind of cover it on the channel. So I hope you can understand that. But a lot of my viewers have been asking me to share my thoughts on everything that's going on with the stock market right now because it's falling pretty heavily, and mostly as a result of the whole CV outbreak. And by the way, I'm going to sound a little dumb in this video because I'm going to be using code words like CV or FLU. Hopefully you just kind of sound it out and you know what I'm talking about. But I have to use code words because YouTube has been demonetizing videos that talk about these things, and that affects the algorithm, and then that affects my channel, and it all kind of affects it in a negative way. So I do have to use some code words here, so just kind of try to bear with me as we go through the video. But in today's video, I'll be sharing my thoughts on everything that's going on with the market, with the whole CV outbreak. I'll let you know if I think all of this, how serious I think all of this is, and if I plan to do any kind of buying on any stocks as they continue to fall here, at least in the short term. And I'll let you know how serious I think this is for the long term as well, and all that kind of stuff. So I hope you guys enjoy the video. Let's go ahead and get started. Hey, what's up everyone? My name is Ale. Welcome back to my world of stocks. All right, let's go ahead and start here by taking a look at the stock market and take a look at how stocks have been falling and the reasons why, and then I will share my opinion on everything that's going on. So in the past week, the Dow Jones fell by over 12%, with almost a 1,200 point drop on Thursday alone, which was the worst single day drop in history. That's pretty crazy. And meanwhile, the S&P 500 fell by over 11% for the week, making it the worst week for stocks since the financial crisis. That's also very crazy. And we are, of course, by all accounts now in a stock market correction. That is absolutely the case, which I'm personally happy about. Definitely not for the CV outbreak, but for the stock market, because it was reaching some pretty crazy levels. And I kept saying that we need to have a pullback to bring prices back down to reality a little. And you can see on this chart here of the S&P 500 how we had that big correction at the end of 2018, and then we've had a very strong rally ever since, but have now corrected here in the past week very sharply. And when you look at PE ratios for the market going back to the start of 2016 up to today, we can see that we were climbing to some pretty high levels throughout 2019, but have now come back to some much more reasonable and much more healthy levels. So again, the CV outbreak is a complete tragedy, but in terms of the market, this was a correction that I do feel was needed. Now, it's true that if earnings take a hit, that would obviously affect valuations, but any hit on earnings would be temporary in my opinion, assuming that the CV situation doesn't send us into some kind of prolonged recession. But we'll talk about that more in just a second. But according to Goldman Sachs, they actually lowered their guidance for earnings growth this year as a result of the CV. In fact, they were previously targeting around 6% earnings growth, but dropped it all the way down to 0, which is very significant. And to make matters worse, a number of high profile and high market cap companies that hold a lot of influence over the broader market came out and said that they expect earnings to take a hit this year because China's shutdown of factories will disrupt major supply chains and lead to bad economic conditions. And that included companies like Microsoft, who said that they will miss revenue estimates for the next quarter because their Windows and Surface segments rely heavily on Chinese production, even going as far as to say that they might have to move manufacturing of their Surface devices to outside the country, which is kind of interesting to think about. And as a result, the stock, which is actually my number one largest in my portfolio, tumbled by almost 10% for the week. And because it's a $1 trillion company, it also helped drag down the market as well. But another $1 trillion company is Apple, and they also came out and erased their previous guidance for the quarter, citing a temporarily constrained iPhone supply and weak demand in China after having previously closed its retail locations in the country because of the CV outbreak. And that caused the stock to tank by over 12% for the week, and likely also heavily damaged many chip stocks as a result too, like Skyworks Solutions that also fell over 12%, and Cirrus Logic that also fell over 11%. But even unrelated chip stocks like AMD and Nvidia fell very heavy as well, with AMD dropping almost 15% and Nvidia dropping over 8%. That was really buffered by a rally of almost 7% on the last day. And to be fair, a lot of stocks actually rallied a little at the end of the day on Friday, possibly because of the kind of oversold conditions, but things were still pretty bad overall. And I also just want to quickly mention Tesla because they fell a massive 25%. And a lot of people have been asking me for my thoughts on everything that's going on with them right now, but I'm actually going to do a very rare double upload for you guys today so that we can kind of go more in depth on what's going on with Tesla because they've been falling by a lot recently. But make sure you keep an eye out for that second video later today. But even other companies that don't really rely on physical products, like for example MasterCard, came out and said that they expect lower revenue for the quarter and for the full year because of the CV's impact on travel and e-commerce growth, and their stock ended up tanking by close to 15% as a result, while Visa was also dragged down by over 12%, both of which are pretty amazing companies in my opinion, and they don't normally dip. And speaking of e-commerce, Amazon dropped by over 10%, which is my second largest stock and one of my absolute favorites for the long term. And then when looking at travel, a number of airline and cruise line companies canceled many trips, leading to stocks like Royal Caribbean falling over 24%, Carnival dropping almost 20%, which by the way, that's a stock that I just kind of recently bought a tiny position in, and their dividend yield is now almost 6%, which is very high. But also American Airlines fell over 30%, while Delta fell over 20%. And by the way, Delta is my favorite airline company that I've been wanting to buy, personally for a while now. But we'll talk more about the stocks that I'm either buying or planning to buy in just a minute. But first, I want to quickly cover the whole CV situation, and I want to talk about how serious I think it is, whether or not we're kind of overreacting, and how long all of this might last. And of course, nobody has any idea how long exactly all of this will last, but I'll give my opinion on all of the uncertainty surrounding it and everything that's going on. Okay, so far, at least at the time of this recording, the total number of CV cases has soared over the past month to nearly 85,000 cases, while the DTOL, which I'm obviously using a code word for, has climbed to nearly 3,000 worldwide. And those numbers have actually climbed a little bit more since those charts were updated, but the CV has now been found in 64 different countries and territories, so it's definitely been spreading. And look, I have no problem at all with the media constantly talking about this and bringing attention to it. I think it's good for everyone to be aware of the risks and to take appropriate measures. But what's interesting is that the FLU, and again, this is another code word, but the FLU seems to be much worse, and yet almost nobody really talks about it in comparison. Now, I know that the two are not exactly the same, and the FLU actually has vaccines, but just to take a step back for a second, the two seem to be pretty similar in that they mostly affect either kids or the elderly with pre-existing conditions the most, and most other people can likely recover from what is apparently the same type of treatment as the common FLU, at least according to Johns Hopkins Medicine. And when looking at the 45,000 CV cases that have now been closed, around 93% of them recovered, while 7% unfortunately did pass away. And I know that 7% figure does seem high, but you have to keep in mind that a case is closed as soon as someone passes away, whereas for someone to recover from the CV, it can actually take weeks. Also, it's important to note that the DTOL percentage of closed cases has actually been dropping pretty fast. In fact, at the start of February, the D rate of closed cases was over 41%, but fast forward to today and it's down to less than 7%. And according to Worldometers, the growth rate of those outcomes has also been dropping pretty dramatically as well, which could potentially be a sign of it stabilizing a little, given that we're now more aware of the illness and are likely treating it better. And look, I know that the CV is still in the early stages of its life, or whatever you want to call it, but compared to the FLU, and I know these figures are slightly outdated, but just kind of work with me for a second, Johns Hopkins Medicine states that cases for the FLU are estimated to be around 1 billion worldwide each year, while the CV is only around 85,000 right now and just over 62 in the US, but the FLU can reach up to 45 million. And The differences in the DTOL numbers are similar in that the CV is still around 3,000 worldwide, and I think there's at least one in the US, but the FLU can see as much as 61,000 in the US and up to 646,000 worldwide. My point being that the CV is, of course, a serious health concern to be careful about, but it's pretty interesting how heavily it's getting covered by the media, and yet nobody talks about the FLU that seems to be, much worse. And yet we generally continue to live our lives like we normally do every year, knowing that the FLU is out there. Still, countries and companies around the world are taking it very seriously. China has been ordering factories to close while they go around spraying disinfectants in the public and restricting where people can and cannot go, while other countries like Japan are putting similar restrictions, although obviously to a lesser extent. But the case, looking at the case in Japan, that one's very interesting because they're even scared of having to cancel the Olympics this year, which I find interesting because that never happens to something like the FLU. So it's kind of interesting that they're so concerned about the CV. But there's also companies doing similar things, like I mentioned earlier. For example, Disney had closed their Chinese theme parks, which they state may result in them taking almost a $200 million hit to their operating income, and the stock has been struggling ever since and fell another 15% this past week. Although I can kind of understand that more given how much more serious it is in China right now, so it kind of makes sense that they would put more limitations. But by the way, Disney is my third largest stock, and that's another one that I think is starting to look very attractive right now at these levels. Anyway, all of these restrictions are likely causing an economic slowdown, and that's leading to analysts like Goldman Sachs predicting no profit growth this year, while economists like former Federal Reserve Chief Janet Yellen are warning that even the United States could fall into a recession. Now, of course, all of this isn't going unnoticed. Reports are coming out now that companies in China are complaining that they need to get back to work. And because the CV growth rates seem to be going down, as I showed you earlier in those charts, NPR is reporting that factories are now starting to actually reopen in China. On top of that, and I know that this is kind of controversial because people have strong opinions on rate cuts, but the Fed has come out and said that while the fundamentals of the US economy remain strong, the CV poses evolving risks to economic activity, so they are closely monitoring developments to the economic outlook and will use their tools and act appropriately to support the economy. In other words, they're basically open to cutting rates even more. And before I finish up the video with my final thoughts, I just want to quickly add that there's been a lot of talk kind of going around about some of this sell-off possibly being fueled even further by the fact that Bernie has been performing pretty well lately, which some claim that the stock market would not be a fan of his policies if elected. And look, I don't want to get political on here. I have no intention of alienating any of my viewers, but I just want to add that Biden just won South Carolina, which appears to be a big victory for him. So we'll have to see if the market's like that next week or if none of this even matters. And maybe it's just people just talking about stuff that isn't really all that important to the market, and maybe all the attention just kind of still remains squarely on the whole CV outbreak. In any case, there is a lot to unpack here. And look, anyone who is claiming to have all the answers or to be able to accurately predict exactly what's going to happen is absolutely lying to you. The truth is that there's a ton of uncertainty going on right now, and you guys know that the market hates uncertainty, and that's why it's reacting so harshly to stock prices that have up until this point been absolutely skyrocketing. And where the bottom is and when it's all gonna kind of start to turn around, I really have no idea. On one hand, things could continue to get worse. We could see the CV continue to spread. Maybe supply chains continue to be disrupted because of restrictions and the global economy continues to weaken. And then the risk of a recession, recession here in the States or even globally continues to rise. And then on the other hand, maybe the whole CV situation continues to stabilize a bit. Maybe people realize that the FLU is maybe a little more serious and they start to come at ease a bit with the whole CV situation. Maybe restrictions start to get lifted a bit. Maybe supply chains are restored. Maybe consumer spending continues to be kind of healthy, at least here in the States and maybe overseas as well. And then this whole situation just kind of comes and goes, and it ended up being a buying opportunity like almost any other correction. And I don't know which outcome is going to happen, but what I do know is that this will eventually pass. And right now I'm starting to see some companies, some really good companies, finally starting to come back down to reality in terms of their prices. And the lower they fall, the more attractive they become to me. So I will probably be doing at least some buying here and then increasing my buying the further that they go down. And as of right now, the stock that I am the most interested in by far is Visa, because it's a really solid company and a stock that rarely ever dips, and I've been wanting to own it for a long time. And I feel like this is finally my opportunity to pick up Visa at some reasonable prices. So I will continue to buy this stock the lower that it falls. On top of that, I feel like some of my biggest positions in my portfolio are also reaching some attractive prices. Companies like Microsoft, really solid company, Amazon, Disney. Now they're already very large positions in my portfolio, so I probably won't be doing too much buying if I do any at all, unless they kind of continue to fall and maybe dip a bit lower. But something like Disney, that's starting to look pretty darn attractive. And then when looking at travel stocks, I've been wanting to buy Delta for a long time. It's my favorite airline company, and this looks like it could be a good opportunity. But the only thing with travel stocks, you gotta be careful because they're definitely gonna get hit the hardest. So those are stocks that could continue to fall more. But Delta is a stock I really wanted to buy, so I may just kind of have to average my way down as it continues to fall. And then you look at something like Carnival, that's a cruise line company, and they're definitely going to get hit, maybe the worst out of, a lot of companies in the market because their business revolves around vacation traveling. So that's kind of the issue I have with them, is that with how much the media is talking about the CV and how much they keep hyping it up and talking about it, it's hard for me to envision a lot of people and families wanting to go on a cruise right now because of how much everybody's talking about the CV situation. So I feel like their business is going to take a pretty big hit this year. So that's something I'm afraid of. But man, that dividend is getting very attractive, almost 6%. So it's a stock that I may pick up a couple shares. I just started buying it, so I do have a tiny position in it already. But I may pick up a couple shares here and there if it continues to fall more heavily, which I kind of think it might. So I would just be kind of careful with the travel stocks, but there may be some buying opportunities there as we kind of go through the next few weeks and months. And then just kind of in the general sense, I'm really paying attention to dividend stocks because as prices go down in stocks, dividend yields go up. So I'm researching more dividend companies that I like. And I'm going to be doing more dividend related videos for you guys, and I'll be researching some different companies, some companies that I've never talked about before on the channel. I'm going to be researching them, and I'll let you know how I feel about those companies and how I feel about those stocks, if I like them or not. And so we should have some fun videos to look forward to because dividend yields are going to be pretty high throughout a lot of different stocks. But anyway, with all of that said, what do you guys think about everything that's going on? Do you feel like maybe we're overreacting to this a little bit? Maybe this is a buying opportunity for the long term, or are you just kind of too concerned about the issues that are going on right now and you'd rather just kind of stay on the sidelines, at least until you have more clarity? I could kind of understand both sides. But for me as a long-term investor, when I like a company and it gets to attractive prices, I usually just kind of average my way down if I really like it. So anyway, those are just kind of some of my random thoughts. I hope you guys enjoyed the video. And if you did, make sure you hit the like button. It really helps support the channel. And I'll catch you guys in the next one. And by the way, keep an eye out for the Tesla video, should be coming out later today. Anyway, thanks again. I'll see you guys later. Take care. Bye-bye.